Hello, I'm Dora from Grace Certified Accountants. If you are running a rent-to-rent business or thinking about starting one, make sure you understand how it works from a tax and accounting point of view. Today, I'll explain what rent-to-rent actually is, how HMRC views it, what taxes apply, what you can claim, and common mistakes I see. Now let's get into it. First, let's look at what is rent-to-rent. But before we continue, please remember to like, share, and subscribe to our channel for more tax tips and advice. Now let's get into it. What is rent-to-rent? Rent-to-rent means you rent a property from a landlord, you sublet it to tenants or guests, you earn a margin between the two. You don't own the property, you are running a business. Now, is it rental income or trading income? For tax purposes, HMRC sees rent-to-rent income as trading income. This means it's treated like a business. You pay income tax or corporation tax on profits. Profits count towards the VAT threshold, 90,000 from April 2024. So yes, VAT may apply if your turnover is high enough, especially for serviced accommodation. So, sole trader versus limited company. Most rent-to-rent operators use a limited company for liability protection, separation from personal finances. But there's extra admin, tax filings, and potentially higher accountancy costs. You can also start as a sole trader, but you'll be personally liable for contracts and debts. So what can you claim as allowable expenses? Typically, allowable expenses include rent paid to the landlord, utilities and council tax, cleaning and laundry, advertising and OTA platform fees, maintenance costs, travel for business purposes, insurance and subscriptions. Key rule: the expense must be wholly and exclusively for the purposes of the business. Now let's look at record keeping and compliance. Rent-to-rent is often cash heavy and high volume. Make sure you track income and expenses per property, separate business and personal spending, use accounting software or work with an accountant from day one. Now let's look at the common mistakes to avoid. Assuming you don't need to register for VAT when you hit 90K, claiming costs you can't prove, mixing personal and business use of your car or phone, thinking you don't need to register with HMRC because it's not your property. Now, rent-to-rent can be a profitable business, but it's not hands-off, and HMRC doesn't treat it like a traditional buy-to-let. Get your structure right from the start, and you'll save yourself a lot of trouble and stress. Need help setting up your accounts or understanding your structure? Get in touch. I'm happy to help. I'm Dora from Grace Certified Accountants. Please remember to like, share, and subscribe to our channel for more tax tips and advice. I'll see you again soon. Thanks for watching.